This is Friday, January 30th, 2026. The final trading day of the month, the final day of the week, and silver just plummeted from $121 to $95. $26 vanished in a matter of hours. Gold plummeted from $5,600 to $4,950. $650 eliminated. If you're watching this and you're panicking right now, I need you to stop, take a breath, and watch this entire content, because what I am about to demonstrate does not make any sense. The figures do not add up. The narrative the market is presenting you is not the real narrative. Silver crashed 22% this week, one of the biggest weekly crashes in years. And yet, right now, at this very moment, you cannot purchase physical silver. The Perth Mint in Australia has suspended sales. The US Mint has suspended sales. The Royal Mint in the UK is out of stock. Dealers in India are defaulting on deliveries. Costco has purchase limits. Let me state that again so it sinks in. The price is crashing, but you cannot purchase the product. Does that make sense to you? Does that sound like a real market? In any normal market, when price crashes, supply increases, sellers emerge, product becomes available, that is how markets operate. But that is not what is occurring here. Here, the price is crashing while supply is vanishing. The price is descending while the whole world is running out. Something is very incorrect. And by the conclusion of this content, you will comprehend exactly what it is. If you are new here, I expose what is genuinely occurring in markets while everyone else is distracted by the headlines. And if you find value in this content, it helps the algorithm demonstrate this to more people who need to observe it. Now, let me explain you why today's crash is not what it appears. A few days ago, I made an analysis. In that analysis, I informed you that $117 was a crucial zone for silver. I explained why a crash was likely approaching. I demonstrated you a 30-year historical pattern. At that time, everyone was bullish. Now here we are. Silver crashed from 121 to 95. But here's what I did not anticipate. I did not anticipate that while silver was crashing, the physical market would completely break down. I did not anticipate mints around the world to suspend sales. I did not anticipate a complete disconnect between paper and physical. And that is what we need to discuss. Let me demonstrate you what is actually occurring behind the scenes. And pay attention, because comprehending this could save you from formulating a massive mistake. First, let me explain how the silver market operates, because most people do not comprehend this, and that misunderstanding is costing them money. There are two silver markets, not one, two. And these two markets are presenting completely different narratives right now. The first market is the paper market. This is COMEX. This is where futures contracts, derivatives, and digital silver trade. This is where hedge funds, banks, and institutions trade billions of dollars worth of silver every day. But here's what you need to comprehend. They are not trading real silver. They are trading paper promises, contracts that state someone will deliver silver at some point in the future. Most of these contracts never result in actual delivery. They are just wagers, casino chips, financial instruments with no physical metal behind them. The paper market is like a giant poker game. Billions of dollars change hands, but at the conclusion of the day, most players never actually observe or touch any silver. The second market is the physical market. This is where actual silver trades, real metal, coins you can hold, bars you can stack, the stuff that exists in the real world. Now here's the critical point. These two markets are supposed to be connected. The paper price is supposed to reflect what physical silver is actually worth in the real world. But right now, at this very moment, they are completely disconnected. The link is broken. The paper market states silver is $95. The physical market states you cannot have any at any price. One of these is lying to you. Which one do you believe, the computer screen or the empty shelves? Let me demonstrate you the evidence. Perth Mint, Australia, one of the largest and most respected mints in the world. They have been producing gold and silver bullion for over a century. Governments trust them. Institutions trust them. Retail investors trust them. On Thursday morning, before the crash even occurred, when silver was still trading near 117, they sent a notice to their wholesale distributors. I have observed this notice. Here is what it states. Due to the increasing worldwide demand for silver bullion products, we have a large backlog of orders for the 2026 Kangaroo 10Z silver bullion coin. As a result of this, we have decided to pause taking wholesale orders for this coin from today until 23rd February to clear the back orders. Read that again. Let every word sink in. Increasing worldwide demand, not decreasing. Increasing large backlog of orders, not surplus inventory, backlog. Pause taking orders, not discount sale. Pause until February 23rd. That is almost a full month of no new wholesale orders. This was sent when silver was still at 117 before the crash, when everything appeared fine on the surface. They are also implementing monthly allocations to ensure all regions receive stock. Monthly allocations, that is rationing language. That is what you execute when you do not have enough product to meet demand. This is not a company having a bad day. This is not a temporary website glitch. This is the Australian government mint, one of the most reputable in the world, informing the global market that they cannot keep up with demand for physical silver. Australia is one of the largest silver-producing nations, and their own mint cannot obtain enough silver. Let that sink in. And then the crash occurred. Silver descended from $117 to $95, a $20 discount in a matter of days. Now consider this logically. Use your common sense. If the Perth Mint was already at breaking point when silver was at 117, what do you think occurred when silver crashed to 95? Every smart investor in the world just observed a 22% discount on an asset that mints cannot even keep in stock. What do you think they executed? They purchased everything they could find. The crash did not reduce demand. It created a tsunami of new demand. Now let me demonstrate you the United States Mint. The US Mint has suspended all sales of silver numismatic products. Their website demonstrates products as temporarily unavailable. When you call their customer service line, they inform you they're updating prices. But here is what actually occurred. Silver prices moved so fast that the mint could not keep up. They were selling silver eagles at $91 when the spot price went above $90. They were losing money on every sale, so they stopped. They suspended everything. And when products came back online, the price had jumped from $91 to $160, an 86% price increase overnight. The 2026 American Silver Eagle that was supposed to release in January has been delayed to late February. Subscriptions are already sold out. This is the official government mint of the United States of America, informing you they cannot sell you silver at the old prices and do not have enough inventory at the new prices. But it becomes worse. India, one of the largest silver markets in the world. And right now, dealers are not just running low on inventory, they are defaulting on deliveries. That indicates they are taking orders, accepting payment, and then failing to deliver the product. People are paying for silver and not receiving it. The headlines coming out of India are shocking. Not even a sliver of silver available. Amazon India sellers are defaulting on silver deliveries. People are posting screenshots of their orders being canceled after payment was already accepted. This is not a supply issue anymore. This is a breakdown of the physical delivery system, and it becomes even worse. The Royal Mint Britain, the official mint of the United Kingdom, one of the oldest mints in the world, they have been producing coins for over 1,000 years, out of stock on silver bars, even 1 kilogram bars, the basic, most common format gone. When major sovereign mints across multiple continents, Perth, US, Royal, are all experiencing the same issues at the same time. That is not coincidence. That is not bad luck. That is a systemic crisis. And if you think that is bad, wait until you hear what Costco is executing. Yes, Costco, the wholesale retailer, the place where you purchase toilet paper and rotisserie chicken. They sell silver bullion. They have implemented purchase limits. You cannot just purchase as much as you want anymore. They are limiting transaction sizes. Costco is rationing silver. Let that sink in. A retail store known for selling things in bulk is now limiting how much silver you can purchase. Why would they execute that? Because demand is overwhelming supply. They have to ration what they have. But here is where it becomes truly alarming. Let me demonstrate you what is occurring in China. And this is the component that should genuinely scare you. And I have the Shanghai Futures Exchange data from today, January 30th. Fresh data, real figures. The SHFE silver vaults currently hold 455 metric tons of silver. That is 14.6 million ounces. Sounds like a lot, right? It is not. And here's the component that made my jaw drop. In one single day, 26.94 metric tons were removed from the vaults. Almost 27 tons in one day. One single trading day. I need you to comprehend how insane that figure is. 27 tons is approximately 870,000 ounces removed in 24 hours from one exchange. At this drain rate, the Shanghai vaults could be completely empty in less than 3 weeks. For context, annual global silver demand is over 1 billion ounces. The Shanghai vaults now hold just 14.6 million ounces. That is barely 1% of annual demand. That is nothing. That is a rounding error. And nobody in mainstream financial media is discussing this. Nobody. Now, here's what makes this truly frightening. China has already restricted silver exports. They have classified silver as a strategic national security asset. They are treating silver the same way they treat rare earth minerals, the same way they treat materials for weapons and AI infrastructure. So consider what China is executing. They are restricting exports. No silver leaves China, and they are draining their own exchange vaults, taking physical delivery, moving metal from public warehouses to private storage. What does that inform you? It informs you that China knows something we do not. They know what is approaching. They are hoarding physical silver while the paper market crashes. They are preparing for something. While Americans are selling paper contracts and crashing the price, China is taking physical delivery of every ounce they can obtain their hands on. One side is selling paper, the other side is hoarding metal. Which side do you think knows what silver is genuinely worth? Now let me inform you who is executing the selling. This is perhaps the most significant component of this entire content. Pay very close attention to what I'm about to inform you. Nearly all of the selling this week in silver has occurred during U.S. market hours, not Asian hours when Shanghai and Hong Kong trade. Not European hours when London is active, U.S. market hours when New York wakes up and COMEX opens. When New York opens, silver dumps, red candles, aggressive selling, price collapses. When New York closes, silver stabilizes. Sometimes it even ascends during Asian hours. Then New York opens again and the selling resumes. This pattern has repeated every single day this week. It is not random, it is coordinated. The U.S. sells and dumps digital derivatives and paper promises. The rest of the world purchases and accumulates physical metal. Stop for a second. I need you to genuinely consider what I just stated. American banks are selling something they do not have. They're creating digital silver out of nothing, pressing buttons, moving figures on screens. Meanwhile, people in Asia and the Middle East are loading physical bars onto trucks. They are taking delivery, they are draining vaults, they are removing real metal from the system. One side is playing a video game. The other side is taking home the prize. American banks and institutions are flooding the paper market with sell orders, driving the price down. They are selling contracts for silver they do not have. They're creating supply out of thin air with a few keystrokes. Meanwhile, Asian buyers in China, Japan, and India are purchasing real physical metal. Middle Eastern buyers in Dubai and the UAE are purchasing real physical metal. They are taking delivery. They are draining vaults. They are removing silver from the system. The paper price descends. The physical metal disappears. This is not new. This has been the pattern for as long as I can remember, for years, for decades. The West sells paper. The East purchases physical. But right now, it is occurring more aggressively than ever. The disconnect between paper selling and physical purchasing has never been this extreme. This is not a free market. This is a rigged game. And if you do not comprehend how the game operates, you will be the victim of it. You will sell your physical metal at the bottom because the paper price scared you, and someone in Shanghai or Dubai will happily take it off your hands. Do not be the victim. Be the one who comprehends. Let me demonstrate you the lease rates. Lease rates are what it costs to borrow physical silver. In normal markets, lease rates are near zero, around 0.3 to 0.5%. Right now, silver lease rates have exploded. Some reports demonstrate 8%, others demonstrate rates as high as 39%. 39% to borrow silver. That is a panic signal. That indicates physical silver is so scarce that holders are demanding massive premiums just to temporarily lend it out. When lease rates spike like this, it indicates the physical market is broken. It indicates there is not enough real metal to go around. Now let me connect all of this together for you. What we are witnessing is a complete breakdown of the paper-silver pricing mechanism. For decades, the price of silver has been established by paper trading. Banks trade hundreds of millions of ounces of paper silver every day. The actual physical market is tiny by comparison. This has allowed the paper price to be manipulated, suppressed, controlled. But now something has altered. Physical demand has overwhelmed the system. Mints cannot keep up. Vaults are being drained. Dealers are defaulting. Lease rates are exploding. The paper market states $95. The physical market states there is no silver available at any price. Eventually, one of these has to give. Either the paper price ascends to reflect physical reality, or the physical market completely breaks down. I believe we are approaching that breaking point. Now let me inform you what this indicates for you, because comprehending the situation is useless if you do not know how to act on it. And I am going to be very direct here. No sugarcoating. If you are holding physical silver, do not panic. I repeat, do not panic. Do not let the paper price scare you into selling your metal. Examine the facts. Mints are suspending sales. Dealers are defaulting. China is hoarding. Vaults are draining. Lease rates are exploding. And you are sitting there holding the one thing the entire world is scrambling to obtain. The paper price is noise. It is manipulation. Your physical metal is worth what someone will actually pay for it in the real world. Right now, that is way more than $95. Hold your metal. Do not be fooled. If you are holding paper silver, ETFs, futures contracts, ask yourself one question. If everyone demanded physical delivery tomorrow, could your counterparty actually deliver? The answer is probably no. There's not enough metal. You do not own silver, you own a promise, and promises break. If you are seeking to purchase, good luck. Physical premiums are exploding. Japan is paying 60% over spot. Dubai is paying 40% over spot. The paper price states 95. The real world price is 120, 130, higher. If you can find physical silver at reasonable premiums, consider yourself lucky. That inventory will not last. And here's the paradox that will blow your mind. The lower the paper price crashes, the faster physical silver disappears. Lower prices create more demand drains supply faster. The crash is making the shortage worse, not better. Now let me address something significant. Some people will state this is conspiracy theory. They will state the silver market is functioning normally. They will state mints are just having temporary issues. To those people, I state examine the evidence. Perth Mint suspended, US Mint suspended and repriced 86% higher. Royal Mint UK out of stock. India defaulting on deliveries. Costco purchase limits. Shanghai 27 tons drained in one day. Lease rates 39%. This is not one mint having a bad week. This is every major source of physical silver on the planet experiencing unprecedented stress at the same time. That is not conspiracy. That is data. That is facts. That is reality. Now let me discuss timing. Today is Friday, the final trading day of January, the final day of the week. This is not coincidence. Big moves frequently occur on Fridays, especially end-of-month Fridays. Options expire, futures contracts settle, traders square positions. The timing of this crash was not random, it was calculated. January was the biggest month for silver in decades. 65% gains, record-breaking moves. Now on the very final day of January, they crash it. They send a message. They shake out weak hands. They create fear. This is how the game is played. This is how wealth is transferred from emotional retail traders to patient institutional accumulators. Your fear creates their purchasing opportunity. Let me demonstrate you the bigger picture. Because what is occurring today did not start today. This has been building for years. Silver has been in a deficit for 5 consecutive years. 5 years. Since 2021, demand has exceeded supply every single year. Let me break that down. Every year, the world mines approximately 835 million ounces of silver. That is total global mine production. But every year, the world consumes over 1 billion ounces of silver. Industrial demand for solar panels, electronics, electric vehicles, medical devices, and countless other applications. Investment demand for coins, bars, and ETFs. Jewelry and silverware demand. Total demand exceeds total mine supply by hundreds of millions of ounces every year. The cumulative deficit over these 5 years is over 800 million ounces. 800 million ounces. That demand has exceeded supply. Where does that extra silver originate from? It originates from above ground stockpiles, vaults, reserves, recycling, inventory that was built up over previous decades. Consider it like a bathtub. New mine supply is the water coming in from the faucet. Demand is the water draining out. For 5 years, more water has been draining out than coming in. The bathtub is emptying. Those stockpiles are now running dangerously low. The buffer is almost gone. The Shanghai vaults are at critically low levels. COMEX registered silver has been declining for years. London vaults have observed significant drawdowns as metal flows to India and Asia. The cushion is gone. The buffer is depleted. There is no more slack in the system. There is no emergency reserve to tap into when demand spikes. And now, with mints suspending sales and dealers defaulting, we are observing the consequences of years of deficits finally catching up to reality. This is not a short-term issue that will resolve itself next week. This is a structural problem that has been building for 5 years, and it is accelerating. Now let me inform you what I think occurs next. I believe we are entering a new phase of this bull market, a phase where paper and physical completely diverge. The paper price may continue to be volatile. It may crash. It may spike. It will be manipulated and controlled as long as the paper market exists. But physical silver will become increasingly scarce. Premiums will ascend. Availability will decline. Eventually, you simply will not be able to purchase physical silver at the paper price. This is already occurring. Physical premiums in some regions have exploded. Japan is observing 60% premiums. Dubai is observing 40% premiums. The paper price states $95. But if you want actual metal, you might pay $120, $130 higher. This is the disconnect, and it is only going to become wider. Now, I want to provide you some historical perspective because what is occurring now has occurred before. In 1979 and 1980, during the previous Great Silver Squeeze, similar dynamics played out. Paper and physical disconnected. Dealers ran out of inventory. Premiums exploded. People could not find silver to purchase even as the price was moving. The paper market stated one price. The physical market stated something completely different. Eventually, the paper price had to catch up to physical reality. It had no choice. When there is no physical metal to deliver against paper contracts, the paper price becomes meaningless. Silver went from $6 to $50 in a matter of months, an 800% increase. One of the greatest commodity moves in history. I'm not stating we will observe that exact scenario repeat. Markets are different now, the players are different, the rules are different. There are circuit breakers and position limits that did not exist back then. But the fundamental dynamic is the same. When physical supply cannot meet physical demand, price must eventually adjust upward. The paper market can manipulate prices. It can suppress them. It can create artificial crashes like we observed this week. But it cannot create physical silver. It cannot mine silver. It cannot manufacture silver out of thin air. Paper manipulation can delay the price adjustment. It cannot prevent it forever. At some point, physical reality wins. It always does. The question is not if, the question is when. And based on what I am observing with mints shutting down and vaults draining and lease rates exploding, I believe we are getting very close to that moment. Now, there are three types of people watching this content right now. The first type is scared. They observe the crash and they panic. They want to sell. They want to exit. They do not comprehend what is occurring, and fear makes them reactive. The second type is confused. They observe conflicting signals, price crashing but mints closing. They do not know what to believe. They are paralyzed. The third type comprehends. They observe the paper crash for what it is. They observe the physical shortage for what it is. They recognize this as an opportunity, not a crisis. They're using this moment to accumulate while others panic. Which type are you? Let me leave you with this. The paper price of silver crashed 22% this week. During that same week, the Perth Mint suspended sales. The U.S. Mint suspended sales. The Royal Mint ran out of stock. Indian dealers defaulted. China drained 27 tons in a single day. Lease rates hit 39%. The price descended. The physical metal disappeared. One of these things is a lie, and it is not the empty vaults. This is what manipulation appears like. This is what a disconnect between paper and physical appears like. This is what occurs when a system built on paper promises confronts physical reality. They dumped silver. The whole world is running out, and you get to determine which side of that equation you want to be on. I will continue to bring you updates as this situation develops. Drop a comment informing me if you think paper or physical will win this battle. I read every single comment. Remember what I stated at the beginning. The price is crashing, but you cannot purchase the product. That is not a market. That is a magic trick. And now you know how the trick operates, because the real narrative is never on the surface. I will observe you in the next.